Hey, peace family. I know for all my real estate entrepreneurs out there, everyone is looming and wondering when is the market going to crash, or what we say, correct itself. And when it comes to real estate development, especially versus buying and flipping or short-term real estate opportunities, real estate development long-term is dangerous right now because we have a propped up economy, meaning the economy is not built on a strong foundation right now. It's on fiat, fake currency that's being printed out literally to give stimulus to make everybody feel like there's money floating around. But at some point in time, this bubble is getting bigger and bigger and bigger, and it's gonna bust. So those who are developing land, and when you develop land, you're doing it based on a market value and an after construction value or after repair value. And so you're thinking this value is going to be there 6 months later, 8 months later, 10 or 18 months later for your development. But what happens when the government finally pushes the button? Because they're going to push the button one day. It's the government holding the whole thing up. It's not the economy itself. It's not the consumers. It's not like the economics of businesses that are holding the economy up. It's the government printing money, stimulus, foreclosure moratorium, meaning banks can't foreclose, landlords can't evict. That's what's holding everything up. So when the landlords actually evict and the banks finally foreclose and the government finally pushes the button, the same equity, the same values you thought were going to be there through your long-term development are likely going to bust and shrink, and you're going to be left with your tunic trousers down. So what I think right now for my developers, my real estate entrepreneurs, my house flippers, my landlords, my wholesalers, etc., is that you want to take a measured approach. One, buy right and make sure you're buying with significant equity opportunities. So when the market does correct, crash, or the bubble does burst, you are not facing full equity depreciation, right? And you can take some of those hits and still be at the new market value once this crash or correction happens. That does leave you at some disadvantage because you based your development based off of future profits that may not be there in 10 months or 18 months or 6 months, depending on when the government pushes the button. So I want you guys to be careful out there as you get into long-term developments. It's very dangerous. Look at short-term opportunities, look at opportunities where there's severe distress and discount on your acquisitions. So you got plenty of equity to be able to take a market blow and get in and get out as fast as you can, or get in, refinance, leverage that equity to get tax-free money from the banks, use that as your cushion, and then make your profits on the back end if the market still upholds itself. So that's just my economic take, real estate entrepreneur take on what's happening current day, post-pandemic in the market, and will it sustain? I don't think so. I can't imagine this going on longer than 6 months. If it does, it's going to be a catastrophe, even worse than what we're expecting. The longer they wait to bust the bubble, because it's going to happen. It's inevitable. It's historical. It's the trend. It's just time, all that. The market's going to crash and correct. The bubble's going to burst. It's a matter of when, and the longer they wait, the worse it's going to be for everyone. So I want you guys to go out there as measured, astute, and patient entrepreneurs and developers, and make sure that you're getting in developments again in a measured approach. So hope that helps. Some value, some game. I'll see you in the next one. Peace.